I was looking at the wrong one. There we go. Boom! What's up, sons? Welcome to the stream. Welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner and or miners. Joining me today is Django, Mr. DeFi Django, over here. Look at his pretty face.
What's up, guys? Yep, I'm here. I'm at the data center, so that's why the lighting is terrible.
I wouldn't worry about the lighting. So he's going to be joining us today. We had Bitsby tripping on a couple weeks ago, and I'm going to try to get more people on to help me talk about all of these topics and get other outside perspectives for you all. So welcome to the show, Mr. Django. You want me to call you Django or DeFi? DeFi is kind of
call me Django.
I'm gonna go with Django.
Yeah,
a fellow cryptocurrency miner. I got to meet you back at what was it, the crypto mining
conference? Yeah,
conference in Dallas. Was it Dallas?
Austin.
Oh,
yeah.
Round Rock. Yeah. I feel like anything north of Austin is Dallas, just because the longest time in traffic is I-35 from San Antonio to past Austin. Like, it's just, you're stuck there most of the time, it feels like. Then past that, boom, 80 miles an hour. Let's go, baby.
Yeah. Oh, yeah. Dude, you don't have the freeways in Utah, the speed limit is 80.
So the toll roads are all like 85, and then all of the state highways are like 70.
Oh, yeah. They're like
the interstates go to like, I think, go to 75. And then I think they just opened up part I-10, which is, for those not from Texas, runs from basically from San Antonio to Houston. And that one goes up to 80 now. So, but not 85. The toll road 130, which goes from basically like Austin or just south of Austin to Dallas area, that one's like 85. But I-35, it doesn't matter what the speed limit is, because as soon as you hit downtown Austin, you're going 10 miles an hour for an hour. It's just like, it's just terrible. Plus with all the semis and everything going through there, it's just absolutely insane. So today, guys, we're going to be talking about the Biden administration proposing a 30% crypto mining tax, closing wash trading loopholes as well. So this is going to be from Yahoo Finance, but I think it's being reported everywhere. We're also going to be talking about the Mississippi and Missouri lawmakers introducing bills to protect the rights to mine Bitcoin and run a node. This is very important. We've been talking about a lot of these states. Bitcoin mining specifically is turning into a states' rights issue in the United States, and that's going to impact, I think, a lot of factors and areas in which you are going to want to decide to open mining farms, right? We've seen this across the board. And then I think as far as federal policy, it's going to swing back and forth just like it does on every other policy, depending on who's in charge, right? And we're just going to have to see how that plays out. Now, we're also going to be talking about the first 100% nuclear-powered Bitcoin mining facility in Pennsylvania. And when will GPU prices drop? Why do they cost so much? Nobody's making any money off of them. They're not profitable. What's going on with that? That's also what we're going to talk about. We have 3 new miner releases this week as well, which is, I think, a record. Remember back in the day when there was a new miner release every day? And now we get like 1 a week. And really, this week we're getting 2, because technically you can just wrap BZ miner and LOL miner in together at this point. They're the same thing, just because they're working together, which obviously is good news for us, because that means more work's getting done to a certain extent. But at the same time, it's not like we're getting unique features from each one. So it's kind of odd. Then we'll be talking about the GPU mining profitability as well. But let's run the ad for today, and then we will get into it.
Today's sponsor is CoinLedger. CoinLedger understands that crypto tax reporting can be difficult and is here to help.
Bam, new ad.
Today's sponsor is myself. Hey. I recently launched a crypto mining e-course at sonofatech.com, and it includes 9 steps to cover when you decide to start your crypto mining journey. This is specifically pertaining to 2023 crypto mining profits and taking advantage of the down market to achieve skyrocket.
I don't think the ad worked all the way. So we'll talk to you guys about it another time. I don't know why that happened, but you know what? It is what it is. It's about the new crypto mining course. I thought that rendered out well, but it clearly did not fully render out. So I don't know what happened there. That's what happens when we move too many systems over and over, but I released the crypto mining e-course over on sonofatech.com. Go check it out. Links down in the description. And we finally have it fully launched. So all 9 steps plus the additional information on my trading or purchasing strategies and all of that. So go check it out. I hope you guys enjoy it. We're also going to hopefully be adding quizzes and stuff. I know like that's a little silly, but I want to add all the quizzes for fun. So it'll be like, you know, you can test yourself on your Bitcoin knowledge, but we haven't added those yet. Those will come along down the line. Let's get into the first topic of the day. Biden administration proposes the 30% crypto mining tax. The administration of the U.S. President Joe Biden has proposed an excise tax. Is it excise? How do you pronounce that, Django? Excise?
I don't know.
Okay.
Are you on the Yahoo Finance article?
Yeah. It's like right there. I was just reading it. An excise tax.
Oh yeah. Yeah, I don't know.
On cryptocurrency miners equal to 30% of the cost of the electricity they use, and plans to eliminate tax-deductible losses related to wash trading of crypto tokens, according to a U.S. Department of the Treasury's document published Thursday. By the way, this to eliminate tax-deductible law, like, why are we, this is absolutely insane. So you're not going to be able to get tax deductible losses on your trading? Like,
yeah, that is, nothing about this makes sense. I don't know what their narrative is.
They're already charging you income when it comes in. They're charging you income when it comes in. Then if you hold it, they're charging you capital gains tax on top of that. And now they're saying if I have a loss, well, screw you. Doesn't matter. You still pay it. You don't get that tax deductible now.
Yeah. Yeah, that is
obviously like this isn't going to pass. I highly doubt it, but you guys should pay attention to the people that are trying to push these things through and vote them out. Right. Because this stuff is insane. Fun facts. The Treasury Department said any company using computing resources owned or borrowed to mine digital assets will be subject to the 30% tax, which is expected to be introduced over 3 years in 10% annual stages starting from December 31st, 2023. Quote, the increase in energy consumption attribute to growth of digital asset mining has negative environmental effects and can have environmental justice implications, as well as increase energy prices for those that share an electricity grid, end quote, the Treasury Department said. According to the White House, the estimated global electricity usage for crypto assets is between 120 and 240 billion kilowatt hours per year, a range that exceeds the annual electricity usage of Australia. Of course, they're going to compare it to Australia. That's perfect. President Biden's 2024 fiscal year budget also included a proposal to apply wash sale rules to digital assets to close tax loopholes. Wash trading for tax purposes refers to investors selling a financial instrument for a loss to claim the deductible and then immediately buying it back. Crypto traders can claim tax deductible losses on losses and then immediately repurchase tokens as digital assets are not classified as securities, while stocks and bond traders are prohibited from repurchasing the same securities for 30 days. But we have to classify that. So,
yeah, I know.
So let's talk about, because we don't even have a classification on this yet. Bitcoin now.
I know, it would be like maybe they could justify some of this stuff if they had like what is it? Is it a property? Is it a digital asset? Is it a security? Tell us.
They've been saying Bitcoin is a commodity. So if I was just mining Bitcoin, it would go to say that this would not apply because it's not a security. However, if they decide to define Dogecoin as a security, then fine, apply whatever rules to Dogecoin as a security you want to apply it to. But if they're going to apply a rule that's typically applied to securities to something that's already been kind of stated as being a commodity, even by Gary Gensler himself, then it's not even fair. But none of this is equal across the board, because what we're seeing here, the problem is this is not just about mining cryptocurrency. This is about an invasion of privacy. This is saying we are going to look into what you are doing with your electricity and tell you whether or not you can do it. That's the end of story for me as a libertarian, where like if you're going to come in and invade my privacy on what I'm doing with my electricity and adjust my obligation to the economy, then we've already gone way past what should be acceptable in law.
I think that people should have a right to secure their own property, right? Because if Bitcoin's your property, you have a right to secure it, especially with your electricity that you pay for. You know, they're not going to come and moderate what you use the electricity for on other things. It's just weird that they're singling out, like it's a huge invasion of privacy, because there's no way for them to enforce this.
If you want to single it out because this doesn't even logically. Okay, let's just talk logically right now. If you wanted to single out energy sources for tax purposes, then do that. Say, okay, if it's coming from coal, right? We're gonna tax the company that's producing the energy that is produced by coal. Fine. Then that makes sense. If your goal is to influence or encourage people to move to renewables, if that's truly your goal, which is what they're saying it is, then you tax at the actual energy production side. They'll raise their rates, sure, right? But it will also make people that don't want to pay those rates put their money into the renewable industry, which will then basically accelerate the technology within renewables, right? So
I mean, that's exactly where, like in Utah, the town I'm in gets everything from hydro. So that's why the energy is cheap where I live. And it's just like, it's like, it's already renewable. Like that the thing with hydro is if the power gets generated whether it's used or not, because they don't have batteries that store it. The water is going to turn those turbines whether people use it or not. So I'm using it. If I wasn't using it, it would just go away, into the power grid. That's not going to get used. So
right, and that's something I've talked about a lot before too. That the fact that cryptocurrency mining as a whole adds a ton of benefits to the grid by removing waste. So there's two things. I've always stated this, like in an economical situation, when we're talking about like country versus country, a society's ability to utilize energy efficiently is directly correlated with the success of that society. So if you have X amount, but you're X amount of energy, but you are wasting half of it, but you become whatever 30% more efficient because you've added in cryptocurrency mining, then that society will succeed over a society that continues to waste the total 50% of their energy or whatever, right? So none of this makes sense, right? If you just, like I said earlier, this doesn't make sense for so many reasons. One, because like where's all the energy coming to charge your electric cars, right? I'm waiting for them to come out and say that charging Teslas is environmentally bad, but charging electric Fords is fine. Because that's probably that's where we're getting, and this is just, it's that ridiculous, right?
That's exactly what's
there's gonna be like, we don't like Musk, so we don't like Tesla. So if you're charging a Tesla, well, that's bad for the environment. But if you're charging a Ford, that's good for the environment, right? Why? Because Ford's in the government's pocket from all the bailouts. That's really what it is.
And that's why I think that this whole because it doesn't make sense. They're really just trying to protect their friends or make their friends benefit from this in some way. We can only speculate what it is, but that's exactly what's happening. They're just pushing this so they can make money.
There's a new book. Hold on. I'm going to get this book real quick because you guys need to see.
Is it called Software?
Yeah.
Yeah. I know exactly the book you're talking about. I don't have it yet, but it's on my reading list. Yeah,
so this book, Software by Jason Lowry. He's a good Twitter follow too. This is really going to explain to you guys too the danger of the United States rejecting Bitcoin. And there is potential, obviously, for Bitcoin to be utilized as a way for the rest of the world, at least according to this book, to move off of the US dollar as a reserve currency.
Mm-hmm.
So if you want to really, adoption of Bitcoin does actually come down to, like I said, I think at the end of the day, success for the United States or for individual countries too. So I think whoever's going to implement it quicker to utilize it to basically stop wasting a bunch of energy and strengthen their renewable sources of energy and so on, I think are going to be a significant advantage. And everything that's happening from the federal government in the US right now is going against that. But it probably does come from fear of it replacing the US dollar as a reserve currency.
Yeah. Yeah, I guess that makes sense, but it's just like they can't stop it because all these other countries, they already want to get off the United States dollar. They want to get off the dollar anyway, but there's not a good alternative. But now maybe they're waking up to the possibility of one that there is, because the petrodollar isn't, like, Russia does not want to use that at all, and so they're going to be doing their own thing.
Yeah. And I'll clarify, it was GM and as far as the auto manufacturers that received bailouts, I think Ford was one of the only ones that didn't. When you see the promotion of particular electric cars and the ignoring of other electric cars from the federal government, it becomes suspicious, I guess I should say. Right.
Yeah.
Which is what we're seeing, right? And it doesn't seem to be aligned based on the actual validity of the product as much as it has to do with something else that's going on behind the scenes, whatever that may be, right? Lobbyists and so on. Even with the most recent adjustment to the requirements to push the Tesla out of a lot of the rebates to where they had to adjust their price again to get back into the rebates. All of that stuff has been super skeezy in my opinion, but
yeah, they're all doing it just to get back at him because they don't like him, and
it's very weird. It went from everybody loves him to everybody hates him, purely, I guess, based on the Twitter thing.
I think that was really a tipping point because he's just making his views like public, and he exposed a lot of the stuff that Twitter was doing. The government was paying them and all this stuff. It was just like, and he's just exposing it. Like, he's not, in my opinion, he's not like taking a side. He's just, but everyone thinks that he is. So it's just, that's why they don't like him. But
the idea that you are I don't know. There's a lot going on with that. We should probably save that for the Rumble local side.
Yeah.
Let's talk about Mississippi and Missouri lawmakers, though, introducing bills to protect the rights to mine Bitcoin and run a node. How about this one? Some good news. Committees from both states will soon vote on bills that would provide a variety of protections for Bitcoin mining operations and node runners. Lawmakers from the U.S. states of Mississippi and Missouri have introduced bills that seek to legally protect their citizens' rights to run a Bitcoin node and to mine Bitcoin. It shall be legal in the state of Mississippi to run a node or a series of nodes for the purpose of home digital asset mining at a private residence. It shall be legal in the state of Mississippi to operate a digital asset mining business in an area zoned for industrial use as well. So they're protecting not only industrial use, but also home use. So home miners, looking good. Neither the state nor a political subdivision thereof shall prohibit the running of a node or a series of nodes for the purpose of home digital asset mining at a private residence. No political subdivision shall place any specific limits on sound decibels generated from home digital asset mining that is more restrictive than other limits set for sound pollution enforced by the political subdivision. Neither the state nor a political subdivision thereof shall prohibit a digital asset mining business from operating in any area zoned for industrial use. Bills have been submitted to both House and Senates of the respective states, with Senator Josh Harkins and Representative Jody Steverson leading the movement within Mississippi. Representative Phil Cristofanelli of Missouri submitted its respective bill to the House. Both states' bills utilize language from the Satoshi Action Fund, which we went over this last year, by the way, guys, and I have a whole dedicated video on the Satoshi Action Fund. Very good coverage there. Amongst the explicit rights for nodes and mining, the bills have language prohibiting political subdivisions of the state creating requirements which are not in line with other data center requirements, and changing of the zoning of Bitcoin miners without proper notice. And this is very important because remember, in Washington, this was just happening, right? We saw in Washington, if you were mining crypto, they adjusted your rates and put extra requirements on there. Adjusted energy rates, put a state tax on them. And so all the crypto mines just had to move over to data centers. It's not like they're using any less energy. It's just like they changed how it's defined, right? Which is absolutely insane. This goes back to like what we're seeing here being proposed on the federal level with the Biden administration, right?
Yeah, just being discriminatory toward minors for no reason.
Right. I mean, par for the course, right? It started with the gamers, and now, which is ironic if you look at what's happened to Twitch, just in general. I think everybody can start to put two and two together here as to where a lot of this is coming from, right? Sound ordinances directed at mining facilities that are not in line with other sound ordinances within the community. Operating nodes or miners being considered the act of money transmitting. Just yesterday, a New Hampshire commission recommended that the State Department of Energy investigate how Bitcoin mining could be integrated into energy grids statewide. Now, this is a big deal too, because if you guys want to know what's going on in New Hampshire, just to give you guys an idea, that is where Library and Odyssey are based out of, and there's a strong libertarian movement in New Hampshire, like the Free State movement. That is actually tied to also Jeremy Kukofkin? I forgot his last name. I'll have to look it up on Twitter, but if you didn't know, he was running for something in New Hampshire. Now I forgot exactly if it was House or what. State Senate, but he is also runs Odyssey. So it's kind of interesting to see this also getting proposed in New Hampshire. There's pretty good news as far as that's concerned. Of course, New Hampshire is in a very odd location for what they're pushing here, right? So there's going to be a lot of outside influence because it's such a small state surrounded by a lot of other small states that have completely differing views, right?
Yeah.
A report released in November of 2022 directed at members of the Texas legislature recommended making Bitcoin an authorized investment for the state while giving tax incentives to local Bitcoin miners. We've talked about all that stuff with Texas as well in the past. Quote, I see an opportunity for states that were left out of the tech boom to have a real shot at taking part in the Bitcoin boom. Oh my gosh. You know why that's hilarious right now? Because what's happening in California right now?
Everyone.
The bank run.
Yeah, exactly. Everyone's running the banks and moving out.
And then so this is pretty funny because that was the tech boom was all Silicon Valley, right?
Yeah. Yeah.
And as that's collapsing, we're moving into the next step. I really honestly see this as the next step of the digital revolution, right? Starting out kind of with the tech boom and everything happening in Silicon Valley. Now we're moving into AI, and cryptocurrency is really where the tech is moving. And because now we have all the technology from, the tech boom, people don't have to work in a highly densely populated area anymore. That like most of our work is not that style anymore. So you have to have different incentives for people. And I think with the tax burden that California puts on people, along with everything else, it's really kind of making it an unattractive space to be in, right?
Yeah.
I mean, like, it's just going to cost you way too much to live there, and people are going to move, right? And if the incentives for cryptocurrency as well move to different states, and I think you're going to see the states that are accepting and putting in rights protections for mining and for custody, right, of cryptocurrency, I think you're going to start to see them prosper a lot more than you see the states that are going to try to restrict it.
Oh yeah. 100%. I think Texas has made some very smart moves as far as tech goes. A lot of companies are moving there, and they're already protective on Bitcoin, and they're gonna, if they can, put it into law, then I think we're gonna see some big. I mean, they're really smart. They're gonna be making a ton of money, and be very, very attractive.
And before anybody says like the federal government is going to change that, just look at how successful they were with marijuana, right? The government was not successful with marijuana on the federal level of going and prosecuting. There were some examples set, but eventually it just came to the point where they had to give up, right? I see that happening with cryptocurrency, right? It just gets to the point to where they're going to set a few examples, and then it's going to be like, okay, like clearly, like people want this. We're not going to be able to do anything about it. And you might see mass exodus like you saw in like Denver, for example, where just a ton of people migrated there on the marijuana issue. I think you're going to see the same thing with cryptocurrency.
Yeah.
Just like mass moves to these particular states, right? And what's extremely interesting about this too is it's going to open up so many possibilities for flyover states to be brought into the digital revolution, right? Like or digital transformation, right? And I refer to digital transformation as it pertains to the Sovereign Individual, the book. If you guys haven't read that, read that book, and then you'll kind of understand what I'm referring to. But as part of the digital transformation, like the step we're in now is transforming money to digital, right? And it doesn't. You could say Bitcoin's trash and Bitcoin's not going to ever happen and blah blah blah. Even then, still CBDCs are happening. A digital transformation of money is happening whether you like it or not. So keep your eyes open, because that's going to happen. It is what it is.
Yeah. I mean, people always say that it's just like CBDCs are 100% going to be a thing, and it's like we don't need them, but they're gonna be there. So, whether it's just inevitable, because as long as governments exist, they're gonna control the money.
You're either going to figure out a way to capitalize on the digital transformation of finances, or you're going to get dragged kicking and screaming, right? That's pretty much, how it is. And you can yell all day at the top of your lungs that you won't, but as soon as your $7,000 tax refund, it goes through CBDC FedNow payment on your phone, you're going to give in. That it just is what it is, right? Like that's how that's going to play.
They'll just push out the old system. I mean, it's the same thing with like checks and stuff. They just phase it out. It's like pretty soon places stop accepting checks, and so it's like, it's all digital. Yeah, they just force you into it.
Right?
You can try as long as you want, but eventually,
I like how everybody
doesn't accept it.
And then people still felt like they had control of their finances, and the federal government didn't have eyes on it. Then COVID hits and they're just depositing money into your account. And it's like, oh no, they have full access to all of this already. So all it is just an easier way to handle it and manipulate it, right? That's it. So the reports also all signify growing interest from states across America on how they can benefit from adopting Bitcoin and utilizing Bitcoin mining within their energy networks. Continued political action from the likes of Bitcoin Policy Institute and Satoshi Action Fund greatly contribute to the education of lawmakers. Quote, now that these bills have been drafted and introduced, we must continue the education process for the elected leaders of the state of Mississippi, Porter said. In regards to concerns voiced by Bitcoiners about the consolidation of hash rate in North American jurisdictions, Porter said that, quote, consolidation of Bitcoin mining is a concern, but is much less of a concern than the consolidation of nodes. So, man, a political figure that understands how this works we must protect them. We must protect this house. Definitely put your support behind Porter, because he understands that it is much less of a concern than consolidation of nodes. And where do we see the major difference between like the two largest networks right now? What is the biggest difference that makes one more centralized than the other? That's where their nodes are centralized on, right? The nodes of Ethereum being centralized on AWS is a much larger concern.
Yeah.
And the fact that you have to have some sort of skin in the game to really participate within those nodes anymore. I know you can run a node still on Ethereum, but like really when we're talking about the nodes that are processing like the transactions, we're talking about having to have some skin in the game. So it's not the same as a Bitcoin node anymore, right? And that centralization has happened. And making that distinction and having people that are representing the public understand how this stuff functions is going to be very important. The nodes and users of Bitcoin network are the ones in control. The block size wars prove this. However, extreme consolidation of mining could become a risk. We at Satoshi Action strongly support the growth of hash rate outside the USA and North America. Here's a big thing though about it, and I think these bills touch on it, and I think it's extremely important, but protecting the home miners. And we need to start considering the fact that your electricity rate should not, like, there should be in these states an incentive for your electricity rate when mining Bitcoin, right? Because you can't compete mining Bitcoin against large companies that are, using a lot more power because they get better rates. So the way to really solve that is going to be figuring out ways to incentivize home miners, I think, at the end of the day. I think they're so important too.
Tax breaks. That's what they should be doing. Like they give you tax breaks with solar and stuff like that. They should give you tax breaks if you're mining Bitcoin.
Yeah.
That's what it should be. They give you like a, just a 20 or 30% break on your electricity bill or something.
Well,
or like a rebate.
Or as simple as saying like, because if you're in an industrial, if you have industrial rates, the more you use, the cheaper your power is.
Yeah.
That same concept should apply to residential rates.
Yeah.
It's simple as that.
Yeah. Because if you're using, 200 amps, you get that tax break. And then if you upgrade to another 200 amp panel, then maybe you get the next tax break from there and there's like a cap on it or something. But yeah, it should absolutely be like that.
It should be the same. If you're going to give it to one, you should give it to the other, especially when it pertains to mining, right? Because at that point too, like it is a business, right? Let's be honest. It's a business. Sure, you're doing it out of your home, but there's other tax breaks that you can write off out of your home, right? Like if you have a home office, you write off that square footage on your taxes. It should so your space, like let's say you have a 150 square foot shed that you're mining out of, that should be a tax write-off, right?
Yeah.
And then you should get to scale that power cost.
Yeah, exactly. I mean, you should be able to write. I mean, I do write all that stuff off. So, because I do have a business, but I do. Yeah. If you have a shed, it's like that whole shed is a write-off because you bought it specifically to do nothing other than mine. So it's absolutely a write-off.
Well, and think about it on big brain level too. Like they want everybody to move to electric vehicles. What do electric vehicles do? They utilize more power. You pay more power. So if you say, okay, hey, look, here at even at the state level or the federal level, we really want to influence people to move to more environmentally friendly vehicles, right?
Yeah.
To do that, we need to upgrade our renewable infrastructure. Okay. But to make sure that we're going to get there, we're going to incentivize the public to purchase electric vehicles by giving them a break on their energy costs if they use over a certain amount. Let's say a Tesla uses X amount of extra energy at your house. If you buy a Tesla and you charge it at your house and it brings it up past that level, then you get a break on your energy use, just like you would if you were, in a industrial zone.
Yeah.
Because then you're killing two birds with one stone, right? At that point.
And exactly. That's what they say they want. They want everyone to get the electric vehicles, but they don't really. They're not. Yeah, they contradict themselves so many times. Like what do you actually want? Or I don't know what's going on with. I mean, I know what's going on, but
Well, it shouldn't be incentivized on on individual industries, right? So it shouldn't be EVs,
it should be across the board,
or Bitcoin mining or whatever it should be. You have to apply that across the board, right?
Yeah.
There's still something to be said though for Bitcoin mining in the first mile. Is it first mile, right? Of either wind farms, right, where it can't deliver all the way across. So to make sure that the state's actually still monetizing those, there should be incentives for building your farms within that first mile. Same with flare gas, so you're not burning off 20% into the atmosphere for no reason.
Mm-hmm.
But
I mean, it gives it another use, because it's like they would have you. What they would rather us not mine with flare gas and just get it burned in the atmosphere rather than getting burned and used for something. That is what a lot. And the thing is, a lot of mining operations already are forced to go to renewables because that's the cheapest power rate there is. That's the cheapest, where you get the cheapest electricity is from renewables.
And if you think about it logically on the flare gas subjects, it's even more ridiculous because if you are running it through a generator, it is significantly cleaner than just burning it off straight into the atmosphere.
Yeah, it is. Filtering it through. You should actually get tax. You should actually get tax breaks for that. You shouldn't have to pay taxes on that at all because you're doing a service.
It's crazy.
And then you're getting something. So it's ridiculous. Absolutely ridiculous.
So it says here, just to wrap this up, if the bills are enacted, they could contribute to mounting interest from state governments, something that Peterson is seemingly leaning on. I think I agree. Quote, the most important concept for legislators to understand is that Bitcoin is not going away anytime soon, end quote, he said. Even if states don't get behind the industry, they need to have a working regulatory structure for it and ensure that businesses who operate in this state can do so long-term in their state. And what do you think about that statement? Because I mean, obviously we get the statements all the time, like Bitcoin's dead, Bitcoin's dying, it's not going anywhere, nobody wants it. But as that's said every single time, it appears to me that it just always comes back based on the same halving cycle. Like, we are not outside of the halving cycle at all right now. Even with this recent dump, with the 30% tax announcements and all these other restrictions they're putting on, plus all of the inflation issues. In fact, without inflation and everything else going on, I would have expected Bitcoin to be in this range regardless right now.
Yeah, exactly. I think that Bitcoin this is like a healthy pullback. I mean, we're still above the 200 daily moving average. We haven't broken out of the cycle at all yet. So, I mean, we're close. We're at the bottom of it, but I don't know. We'll see what happens. But yeah, I think that I don't think Bitcoin's going away, and I think more people and more institutions are starting to realize that, right? Because the longer that Bitcoin exists and keeps getting more and more attention every cycle, it gets more and more attention, that they're going to realize, hey, these laws need to be in place. And I mean, that's the same reason why the government hasn't said anything like classified what Bitcoin is, or a lot of these things are, because they're just hoping it goes away, but it's not. So
yeah, I mean, that's a good point you bring up, because it did keep getting brushed under the rug. I remember back in like 2016 through the 2018 cycle, a lot of legislation was announced and then completely ignored, right? Like nothing happened. And they thought it was just going to go away. It's almost as if Satoshi planned these cycles so that the government couldn't figure out what was going on. Like, it's obviously, I don't think that's true, but it's kind of funny that it seems to work in that manner, right? It pumps up, but because it dumps down and like levels back out before the government's fast enough to actually do anything about it, they kind of forget about it, and then it just takes over again, and then they kind of forget about it again. It's kind of funny.
Yeah, because I mean, that's exactly what happened. Because across the board, like in all the industries, like even just like from people interested in investing to like institutions and, you know, companies like Visa and Master, they had all these big crypto stuff that they were planning on implementing, and they just put it all on pause. They're like, oh, all the interest is gone. We'll just not worry about it. And then when it pumps up again, everyone will jump on board again. I think people, maybe next cycle in 2025. You know, we'll see, I don't know, maybe it'll be soon, 2024. We'll see people realize that Bitcoin's not going anywhere.
Well, I think what you'll see is a shift in necessity, right? Where like, because of everything else that's happening in the world, because of inflation and because of people needing to move more freely than they used to in the past, because of the digital transformation, it's just going to be ubiquitous at some point, right? And like, I realize like a lot of people are talking about like USDC right now in chat. Just like to give you guys a couple ideas on my opinions on stable coins, they were a great demonstration of how cryptocurrency technology or blockchain technology can be utilized to prevent governments from interfering with individuals' economic worth, right? That's what we saw in Argentina and Venezuela. Venezuela, though, I mean, they used Digibyte, right? Back in the day, they didn't even use the stable coin. So the price or the success and failure of any particular stable coin, it doesn't mean anything to me. Because I think that the only thing that matters is one Bitcoin equals one Bitcoin at the end of the day.
Yeah, exactly.
Like, we're not going to be talking about the US dollar 50 years from now, right? I just don't think, like, it's not even going to be something like
there'll be other,
there'll
be other, I think at that, like in 50 years from now, I think that the price will be pretty stable, and we won't see like these big volatile movements where Bitcoin goes down 30% in a single day. You know, it's going to be like 1 or 2%. Bitcoin will be like a stable coin. It's not going to do much.
Well, the reason it does that is because of the halving cycle. So, because I've said this before, what we're looking at, like, we're going to go through the halving cycle a couple more times, like big swings. And then once the newly minted Bitcoin comes to par with the amount of Bitcoin being paid in transaction fees, once it's 50-50, like let's say you pay 0.000 or per block, right? So let's say it's 0.1 Bitcoin per block in transaction fees, and you're minting 0.1 Bitcoin. Once that's 50-50, then you just stabilize the price and it's done at that point, right? And I think that's something that and that's when I guess what people call like the macro cycle, when it breaks into that, right? So that's kind of what we're waiting for. I think we got quite a few more cycles before that becomes a thing, personally, but eventually that is what does happen. You're correct. So Pennsylvania is now home to a 100% nuclear powered Bitcoin mining facility. Man, it's gonna be hard to compete with some of these guys, isn't it? Bitcoin has forever been under scrutiny for its proof of work consensus. The Bitcoin mining process was considered to be an energy consuming process, which was debated as being harmful to the environment. We all know this at this point. It was also said to have a negative impact on energy resources. Even though several Bitcoin mining firms have turned to various renewable sources of energy, like hydropower and solar, the mining industry is still looked down upon. Now, according to
Mhm.
details from the recent press release, TeraWulf announces the launch of a 100% nuclear-powered Bitcoin mining facility in the U.S. Owner and operator of domestic Bitcoin mining facilities powered by 91% zero-carbon energy, TeraWulf has recently announced the energization of the Nautilus facility. This facility is now fully operating on 100% nuclear energy with a hash rate capacity of 1 exahash a second. The mining firm is sourcing energy from 2.5 gigawatt Susquehanna. I don't know how to pronounce that. Susquehanna. I don't know where that is. Nuclear generation station in Pennsylvania. Can say it.
Oh, I don't know. I can't even say it. Susquehanna.
I'm glad I'm not the only one, but I do wish.
Yeah.
I had to Google that later. Anyways,
Yeah,
that's
it's
in
gotta be
Pennsylvania.
a Indian name, like a Native American tribal area, something.
It has over 8,000 miners on board here. So it's funny how we go from, Bitcoin mining bad for the environment, and then like we have proof as Bitcoin mining enthusiasts that in fact the Bitcoin mining industry is powered by more renewables than any other industry on a percentage base, right? And we have proof that they are moving towards that direction. So it's such a weird gaslighting from the federal government on this topic, right? It's like, oh, it's so bad for the environment, but it's like, it seems to be the only thing that's pushing towards more renewables.
Yeah. And naturally goes that way because that's where the cheapest electric is. So it's like,
and increases the funding. You wouldn't be able to do this unless there was a way to monetize it. That's the thing. Like, it means that there is more economic benefit to energy companies moving to renewables. You can do it faster because you have this new thing that allows you to generate revenue to move into renewables quicker.
Yeah.
You couldn't move into renewables as quickly without cryptocurrency.
Yeah, without the money. Yeah, because if there's no money in it, it could be slow development. Now that there's money in it, it's coming in. Yeah,
because the markets will always win. That's the thing. Like everybody, we're like. Anytime we talk about this, like I always think about like The Wealth of Nations by Adam Smith. You ever read that book?
I haven't.
Okay, that's a good one.
I'll have to add it to my list.
But like. It goes over like demand and like each individual country's demand and like the supply of resources, and like even if you have like the most communist country in the nation in the world, it's still going to be beholden to like the market driving forces internationally, right?
Yeah.
It doesn't matter at the end of the day. You're going to like, you're either going to try to ignore it and fail and collapse, or you're going to adopt it and move forward. Right.
Yeah.
So when will GPU prices drop, Django? What do you think?
I don't know. I feel like that if they would have dropped, they would have already dropped. I think we're pretty much at the bottom unless Nvidia decides to drop their prices on the new 40 series cards. Or something changes, but I don't think anything's gonna change. I don't know. Do you think there's a lot of people out there that have their farms off and they're just holding cards?
I do think that is the case. I think this
time,
there's no incentive to sell your GPUs unless you don't like, unless you're like completely out of money, right? But I mean, we've seen the collapse already of the ASIC market, right? And the ASIC market, I was just going over the data for my crypto mining course. You can check it out on sonovatech.com. Shameless self-promotion there. Because I go through all this data. But we just saw the Bitcoin, we just saw the ASIC miners drop by 10x. GPUs have only dropped by about 3x, right?
Mm-hmm.
If we were to expect GPUs to come down, we would have expected it when the ASIC miners dropped 10x, right? And that's just not happening.
Well, I think there's still, and the thing is there's other uses for GPUs, so they won't ever drop as much And they drop over time as new technology comes out, because people still use them for gaming, and they have a lot of other uses. So I don't think they would drop that much until the new generation comes out. And I don't think that the 40 series is like so much better that people are running out and upgrading it.
Well, it's extremely expensive for not that much of a boost over a 3090.
Yeah, exactly.
And you can get 3090s now for like 800, 700.
Yeah,
so it's like, well, a $2,000 4090, right? Where I also have to basically go upgrade my power supply and all of that, right? So like it's really like it is like a $2,000 to $2,500 upgrade at the end of the day for a gaming PC. If you want to mine on it, like good freaking luck. Like, I mean, it seems cool until you are running it on Flux with a non-ATX 3.0 compliant power supply, and Flux decides to spike that shit and blow your card and the whole rig. Because that's what's going to happen, right? Like we saw that with like the 30 series, like the 3090s and stuff on Flux, where it was like blowing stuff up. And that was like not even requiring a new standard. So I don't think the longevity of 4090s in a mining farm makes sense right now. The ones that have been impressive have been the 7000 series on AMD, but there's still a lot of work that needs to be done from the miner perspective on them. But the 7900 XT right now has been pretty impressive on DNX, for example. But, oh, man, the amount of research I'm having to put into figuring that thing out right now. Proof of useful work is going to change the game. I mean, to the point to where I'm thinking about selling all of my Octo miners and just buying servers.
Yeah, I have been doing my research into Dynex this past couple of days, and I'm like, man, am I gonna have to just completely redo everything? Because that's where it's heading. Like, right now it's not, but a couple years it's going to be all proof of useful work.
I think it will. That's the next evolution of GPU mining is proof of useful work. We have to admit that now. So if we're looking at that into the future, we have to take into account that completely changes the infrastructure. It just does.
It really does. I think we'll see like Octominer. They'll probably come out with their own case.
They've hinted at it, and iPolo announced theirs too. So
so they're gonna everything's gonna switch that, because it's like I want to upgrade my stuff right now into cases, but I'm like, well, maybe I shouldn't, because I can't, because I won't be able to do proof of useful work on any of the cases. So
there's a few things on the Octominer I'm figuring out with DNX. It looks like you can change your AES instruction set, and then on the X8 you can go to a 4790 or 4770 and get some more hash out of it. And then you can, on the X12s, you can go to the 7700K or the 7700. In both scenarios, to keep temperatures on the CPU under control, I've had to get the Noctua low profile coolers, and they seem to be the only ones that work, which means that, I have one right here. Show the stream. So these right here, these low profile, they're like the NLI. They're just 1150 socket bracket. So you take this, and these actually fit on both the Octominer X12 and X8. If you try to run it without this, you'll start spiking those i7s just way too much, right? So I think the 7700K on the stock cooler for the Octominer was hitting like 96C or some shit. So they start throttling at 94C, and then as soon as they throttle, what happens to your hash rate? It all takes a shit right away.
Yeah, it all goes down.
And then I'm trying to figure out the actual rules to the game, though, because it's not making a whole lot of sense right now. It doesn't appear to be PCI bandwidth. It appears to be all processor capability so far, but I think it'll take some time.
We might see CPU mining really start to take off too, if proof of useful work takes off too.
I don't know. Well, CPU mining for proof of useful work?
Well, I don't know. Just because more people are going to have CPUs, and so it's like an option, right? So you can mine non-proof of useful work algorithms, but you'll have a powerful CPU that you can also CPU mine. if you're not going to use a proof of work.
I think
because
well, it depends on what happens with the proof of useful work, right?
Yeah,
because
it really depends, right? Yeah,
if we go down the path of the research paper for Flux, then we're looking at all of the PCI lanes getting taken up. Like it's going to just completely bandwidth soak all of the PCI lanes. I think that would still potentially allow you to also still throw the CPU or a few cores of the CPU on there. But then, like in the case of Dynex, what we're seeing is the instruction set getting pushed through and pegging the CPU, in which case you're not going to be able to mine on that CPU if it goes that path. It's also going to take some time, I think, for the developers on the miner side, the mining software side, to really figure out how to process all of that data. So I haven't been able to put my finger on it. It's not like, so it's not cut and clear. So for example, right, we did this test last night. I have an X12 with a 7700K in it. I had temperature issues last night. I'm fixing that and we'll test again. But so it wasn't performing at its full 4.2 gigahertz, right? But we could run 4 1660 supers on it and get 1 kilohash, right? If we tried to run 4 3090s on it, it would still just get 1 kilohash. It wasn't like, so it doesn't, that tells me it's probably not a PCI bandwidth issue. That's a CPU issue. Purely. But anyways,
we'll see GPU prices go down. If proof of useful work comes around, then GPUs are always going to be expensive.
Yeah, because now you've integrated that into AI, right?
Yeah,
and
exactly.
all of that, and AI is taking off like crazy. But there is this article from Hivon. They have a couple good points if you guys want to look at this article. It says, like, you can compare the prices of mid-range MSI card. Used to cost no more than $192, but today it sells for an average of $298, implying that the prices of GPUs are actually going back up, not going down, and not even staying at their lower prices that they hit at the bottom. So can you expect GPU prices to go down? It says, here's the reasons. In 2023, it says, firstly, a graphics card has never been an affordable purchase. This is especially the case for more powerful models used by miners and gamers. In fact, manufacturing graphics cards is a costly business, with companies investing billions of dollars in development and production facilities. However, by the end of 2021 and beginning of 2022, we witnessed a significant increase in price for all GPUs. This was especially vivid if to look at the secondhand market, and many interested users are wondering if GPU prices will ever decrease or if we should prepare ourselves for a prolonged crisis. So to find the answer to when will graphics card prices drop question, we must discuss the reasons behind them. It brings up the pandemic. Logistics were disrupted as many companies shut down or suspended operations. Many employees began working remotely, requiring more office equipment. That is true, including computers and laptops. And this is actually extremely true in probably industries some people aren't aware of. I work in IT. And one of the things I noticed is that the move off of VDI servers and onto laptops and or desktops for jobs that have any sort of drafting or graphics work or like architecture engineering. So as opposed to before, where those users would go into the office, usually have like a small like computer or like a laptop with no GPU on it, then they would connect and then just utilize like the VDI servers, which is like your virtual desktop environments, for processing all of that. Now they're doing it at home. So there was a huge increase in just that, the need for, all of those industries to move over to actually picking up graphics cards, which I thought was interesting. And that actually is still being deployed now, right? Like that hasn't slowed down. So a lot of the GPUs are going to those industries as well.
Yeah.
And then they say shortage of workers and people became more interested in video games while isolated at home. I don't know how true that is or how much of impact that has. I don't think it really does, but I'd have to look at the numbers. I don't think the Steam numbers really increased that much, but I'd have to look.
I think that people like the people that were already interested in gaming were already gaming.
Yeah.
I think the gaming industry is just a slow increase. It's not no drastic spikes.
It's a weird one too, because like I think gaming has gone downhill probably. It's been going downhill for the past decade, probably, in my opinion. Like I always look at like 2012 of like as the golden age when like everything came out that was like where innovation hit, and then everything kind of stopped right there, and it moved into how do we monetize this better. And then it was like, okay, Call of Duty 23's out and we have a battle pass in it now, so now I can't even unlock everything unless I buy something every quarter.
I think 100% that I think that the game, like the quality of games that have been coming out recently is horrible.
I mean, like, I'd honestly,
it's all the same model. It's like the battle pass, microtransaction, and the whole gaming industry is kind of sick of it. But no one's innovating anything different. So
yeah, and the games that I like to play fine on my Steam Deck, right?
Yeah,
like I just go back and play like BioShock 1, 2, and 3 over and over again, and Deus Ex, and like I haven't. And then the newer games that I like have all been like indie games that run on that fine, you know. What is it? Dead Cells, stuff like that, right? Like the side scrollers. So like I'm not sure. I could say right now I would be happy with all the games I play on having still like a GTX 970.
Yeah.
I wouldn't even need I wouldn't feel like I need to upgrade.
Yeah, I don't really play anything. I play all my old I like my old games, from playing games on my PS3, and I like all the old the only thing new that I played in like the past decade is I've been playing the new Halo a lot, which came out forever ago, and then that's pretty much it. I don't really game that much at all, and then I played a lot of PUBG. I like PUBG a lot, but
I'm a big gamer, but I haven't like I don't know. Hogwarts Legacy has been kind of fun, but it's still Hogwarts Legacy is like the example of like everything that I've talked about wrong with the gaming industry, which is like it's literally it just takes all of the elements of like open world and just puts the Harry Potter skin over it. So it's like I feel like I'm just playing like another GTA just in the Harry Potter universe. It's like it's all the same mechanics, right? Go here, do this, add all these side missions in. They're usually pretty boring. Go gather 10 of this and 20 of that. And I don't need
it's all the same. I mean, we've seen like Assassin's Creed and Ubisoft do that model for the past 10 years. It's like it's the exact same thing. It's like we want something different.
Exactly. Yeah, and that's what it feels like. But hopefully the gaming industry gets better. That being said, it goes on to mining. It talks about how the mining trend has reached its peak. To mine crypto, you need powerful computer equipment. And it talks about like that increasing the demand, and then the scalping demand, and then the professional demand. So when it gets down to when my GPU prices decrease, it says first, the reason for the dip in demand and consequently in price is perhaps the high volatility of cryptocurrency. A sharp increase in value always turns into stagnation. After the crypto price drops, graphics cards will have much less interest. Some miners will resort to selling their equipment to offset their losses. And then the second reason is time. The acute phase of the pandemic will pass, logistics will recover, companies will start up, and chips will be produced in larger quantities. I'm not so sure this is true. And when there is no such demand for graphics cards, scalpers will reduce their activity. Another reason for the price recovery. One of the first things that goes when economy is doing poorly is like your entertainment. And GPUs outside of mining are utilized for entertainment, right? So you would expect that with the downturn of the economy and so on, that we would already see this going into downward trend, and you're not really seeing it. I don't know. And then what's the incentivization of AMD and NVIDIA building more chips to reduce prices? Because then we get into like the two previous reports both AMD and NVIDIA caught for price manipulation already.
Yeah.
By restricting access.
Yeah, they are a company. They want more money. Like that's just like how they operate. Like like when you get to the size they are, it's hard for like the board of that company to not just be like, yeah, we want to just rake as much money as we can. And I mean that's their goal. So it's like they're not gonna produce more chips to lower prices. They don't care about that. They just care about their margins.
So it says that the pandemic is gradually slowing down and vaccines have been developed to combat the disease. I guess we're going to get shadow banned again. In this regard, suspended production facilities are being reopened, but restoring production levels will take some time. Political and weather conditions, which have been less than favorable, have also played a significant role. Typhoons, increased humidity, and some thawing in the political arena give hope for improvement in the situation of the market for silicon elements. I don't know that that's true either. Like, do you feel like the political front is calming down?
I mean a little bit, but I mean it's a completely different political front.
Bit.
Like, well, like the COVID stuff is not that big of a deal anymore, but like it's the political stuff that's going on it's never been bigger than it has been, in my opinion.
Because we have to worry about, I mean, on the state side for GPU pricing, at least we have to worry about tariffs and all of that, right? So I don't think those are getting removed, are they?
I don't know.
Probably not. I thought they were going up or something. Anyways, I need to look into that. I won't speak out of turn on that. So check what GPU you have. Checklist. If your video card has been installed for a long time and you want to know if it's up to date today, blah, blah, blah. When researching models, we don't really care. How to overclock. They just go through that. And their conclusion says, recent trends give us hope that GPU prices will drop once production and logistics are stabilized and there is a sufficient number of graphics cards available on the market. Miners will be able to breathe a sigh of relief and buy the model they want at a reasonable price. For now, the only way out is to overclock the GPU within reasonable limits to get more performance out of them. I disagree with all of this. So right now, you should be underclocking everything, okay? Because you should be getting the best performance per watt, hash rate wise. Period. End of story. If overclocking gets you that and it actually is more profitable for you to overclock, then sure, I can understand that. In most cases right now, most of the algorithms I play with, that's not the case. And I completely disagree that we'll have GPU prices dropping.
Yeah, I disagree too. I think that we saw the low, like is already. I mean, right? They've already come up a little bit because I think 3070s were around the $300 range, and now they're like back to the $350, $400 range. Right. So, and the reason they dipped that low is because all the miners selling, but now pretty much the selling from mining is over. The big dip anyway. There's still people selling, obviously, but there's still people buying now, and so I think that we're there. We're at the bottom, and I don't think we won't see it dip down unless like a ton of people start selling again or they come out with new cards. I mean, that's the only thing that drives the price down.
Well, and we also have the issue of Bitcoin being accelerated, right? So the Bitcoin halving now has been accelerated to April of 2024 from December of 2024. Meaning we're looking at a much quicker cycle this time. I do have a theory that the cycle might slow down and get delayed.
If you over the summer,
if you want to hear that over the summer,
over the summer, it might go down. I don't know. I feel like
with the large deployments of S19s with the single aluminum heatsink on the back plate and a ton of them already failing and the main cause being heat, the summer might see some large farms go down and have lots of failure rates. If that happens, and we start to see all the farms shut down off of that, we could maybe see it compensate and slow. I don't think it's going to go back to December, but that's a possibility. However, at the same time, then I'm reading one more exahash online at a nuclear plant, and I'm like, all right, well, it's still going up still too. So maybe not.
Yeah, I think it's going to keep going up. I don't know. I think the summer might have a little bit of pullback, but I mean, how much higher is it going to get by the summer, though? You know, is it going to get, you know, what by the time summer hits, is it going to be a little bit higher, and then we're going to come back down to where we're at right now?
So Texas farms that do not have active cooling on S19s are effed, because the S19s will not run in 115 degree heat, and it doesn't matter how much of that 115 degree air you're pushing through them. At that point, they're going to turn off.
Yeah.
So you have to have active cooling, and that's not going to work in a lot of those shipping containers that have been deployed.
Yeah.
So unless those shipping containers are running What's miners, or they're running older Bitmain equipment, or they're immersed, I see at least some of that hash rate coming off, right?
Yeah.
Because Texas will get way hotter, and Texas has a lot of hash rate. New miner releases. The big one, of course, because we were talking about this earlier with Dynex, the SRB miner added the Dynex coin, and they added support for AMD, NVIDIA, and Intel. They have a 3% fee, which is quite high actually on this, but to be fair, they're the only miner outside of the developer for the coin to support this coin, and the first one to do so. They also did add Intel Arc support for Autolicos 2, ETC hash, ET hash, UB cache, and Blake 3 Ironfish. Are you ready for Ironfish, sir? Ironfish launches on the 14th. We'll be talking about more on sonofatech.locals.com as we get closer to that date, and I will have a guide out for you guys on Ironfish, but that will be coming soon. So you got to take that into account.
Research into that.
Yeah, that's going to launch. So testnet 3 ended earlier this month or whatever, and then last month. And then the launch is on the 14th for mainnet.
Awesome.
So that'll be good.
That's sweet. Yeah, so, SRB miner. Really adding that stuff in there.
Adding support, man. That's SRB miner, I think, is the only one that's added support for that recently. So SRB miner kind of making waves right now. I mean, we do have the other two that are making waves, which is BZ miner and LOL miner. Like I've said, both of these are basically the same miner at this point. But BZ miner version 13.4.0 came out yesterday, as well as LOL miner version 1.70. Both of them are basically improving Nexa hash rate and efficiency, and fixing some various issues with Nexa on stopping finding shares and extra nonce rejected shares. They fixed hung GPU on AMD with adding ZIL and some other algos. A lot of fixes here. The only big note is improved Nexa performance, right? So it does say that the new Nexa implementation may require new overclocks. So if you're getting hung GPUs, you need to readjust your overclocks. And that's pretty much, it's the same across the board, right? So it does say, hint, due to recent problems, we advise to use the miner with the DNS over HTTPS-O when connecting to an auto location pool, else the pool mirror you receive might not be ideal for your location. So if you guys are going to be using auto pool switching, or auto location pool, which means if you have a pool that gives you like one URL and it'll automatically connect you to whatever the closest location, then you'll need to add this into your extra arguments. So keep that in mind. But BZ miner, LOL miner, I like seeing them work together because we do get more frequent releases from both of them. And it's nice to see SRB miner coming out with a release this week.
Yeah, that's nice.
And adding support for new coins. I like to see support from miners like that for new coins. It's pretty awesome that they're already releasing support for Blake 3 Ironfish before the launch. So we'll have something right off the bat, which is nice. Oh, mining profitability, man. Have you looked at this in a while?
Like what to mine?
Well, what to mine's always negative now, right? So There is that. I've been using hashrate.no lately.
Yeah, I like them a lot.
And they're showing DNX across the board. But DNX, like we were talking about, it's funky, man. It's funky.
It's weird. It says that it's profitable, but yeah, it is funky. I don't know. I can't wait. I need to do more testing with it. So
it's profitable if you have one GPU with one CPU, or you figure out how much CPU you need for it, right? So
yeah,
it is profitable, but you're not going to be able to go turn on your entire farm configured like we have had them configured before from an infrastructure perspective and have them hit these numbers, right? So that's not going to happen.
Yeah, exactly.
And it already has dropped in profitability because I think what is it, like double? The difficulty like skyrocketed.
Yeah.
Let's go take a look at mining pool stats here. It's not even tracking difficulty right now, but yeah, it went from, Saturday, March 4th at 2.2 mega hash a second last week to now we're at 18.42 mega hash a second. That is
skyrocket.
Massive.
Yeah, I think, because I remember checking it a couple days ago, and it was saying that the revenue at 10 cents was like 87 cents or something a day. And now it's like 39 cents. So it definitely has come down a bunch.
Yeah.
I have all my stuff that's on. I have 2 rigs on Alphium. And then pretty much the entire farm is on Ergo and Kaspa, dual mining Ergo and Kaspa.
Gotcha.
Not the data center though. The data center is still offline. But hopefully get it online really soon.
You have any ASICs running?
I have one. I have one L7. And,
one L7.
One L7.
What's that?
And I got it.
Is the I think.
What was that?
Miner stats saying it's doing like $8 a day merge mining or something.
Yeah, it's doing pretty good. I like it. I got it since the launch. Like I was one of the people to get it. Like I pre-ordered it type thing. It came,
nice.
But I paid way too much for it. Though I paid the high price. I paid $25,000 for it.
Oh man.
Yeah, oof. But I mean, I've gotten back like $11,000 from it. So I'm like halfway to my ROI, but I could sell it for like $8,000 and still be under the 25,000. So I'm just good. I mean, I'll sell in the next cycle for sure, but it was just my very first experiment with ASICs. But I mean, I've liked it like as it just because it just sits there in mines. And it's profitable.
I got a few and they're staying profitable. The IB Link BMK3 is the most recent one I got.
Yeah.
And that one's been doing good. And then the iPolo,
they're not as fun though. I feel. I mean, you don't do anything with them. You just plug them in and like, There
you go. Yeah.
Yeah, the GPUs are so much fun.
I mean, you just don't want it. You don't want to have the fun like the people with the S19s are having right now. Like you don't want to have that fun.
Yeah, I don't want that fun. I don't want. I want it to work.
Trying to troubleshoot all of those ASIC chips and figure out what traces are broken and what chips need to be replaced and reflowing and that's
nope, doesn't sound fun to me.
Just go hire Austin Childress to do it for you. That's it.
Yeah,
that's what I say. Just go hire that guy, man. He's got it down. I was just like, they're like, I'm at that training course. I'm like, yeah, I'm just gonna call you when I need it done.
Yeah. That's why all these ASIC specialists that are coming out because they got to repair their boards.
I think on the next bull run, that could be a very lucrative business because especially with how bad these Bitmain miners are getting produced.
Oh yeah, it could be huge. I mean, it's just a business that sets up and just repairs them. Just ship them here, fix them, and ship them out. That'll be a big business.
That's what's getting started up and spun up everywhere. A lot of these farms though are getting they're hiring technicians, right?
I mean, if you're a big farm, it makes sense to have your own on board. But for like the home miners, it's just like home mining with ASICs is a big business anyway. So, I
think we'll start seeing probably some more interesting implementations into the home as we start to see maybe these policies get passed, and like we were talking about with Mississippi and Missouri earlier.
Yeah, there's definitely ways to implement Bitcoin mining into the home with like, I've seen like people that were building like Bitcoin powered water heaters that, you know, their electricity, you know, heats their water heater for their home, or people have like their hot tub or their pools heated with Bitcoin miners. Like, it's, I mean, you know, not everyone has a pool and not everyone has electric. Cause I mean, like my water heater is gas, and the gas is way cheaper than electric.
Right.
So it's like, it's not effective for everywhere, but it's just cool to see those uses that we would never have thought about. And now that it's being used for that. So
yeah, I mean, there's a lot of innovation that I think that's going to come around as far as that's concerned.
I think what a lot of people do that live in where there's a lot of snow is they have heated driveways. It's like you can use Bitcoin miners for that.
Yeah.
I mean, there's a lot of things that, I mean, people use it for heating their homes during the wintertime. It doesn't work where I'm at, but yeah, I think it's cool to see the innovation though. I think it's only going to get more and more innovation coming.
All right, so let's get into the questions and answers for the day. We've kind of gone for a long time already. So in chat, super chats are never required. I always appreciate first to get answered because they're the easiest to read. I did miss a couple, so I apologize for that. I was trying to scroll up in my chat. It's not coming up. But if you tag at Son of a Tech, it'll highlight the message orange, which makes it easier for me to read. And if you have any questions for Mr. Django here, make sure you let me know to direct it towards him. But otherwise, we'll just kind of answer the questions together. Everybody just wants to talk about USDC collapsing.
Yeah.
Which is like, I think I already addressed my thoughts on that. It doesn't really, I just, you know, I go back to like one Bitcoin's one Bitcoin. It's obviously going to have a negative impact on the perception of cryptocurrency. But like, also I'm looking at it right now, it's not depaired that hard. It's down to what, 93 cents?
Wow. Yeah, that's a lot farther than it should go, but I mean, yeah, it's not that far. But yeah, I think we'll just be a lot more FUD. You know, I mean, like with FTX collapse, it's like the price is going to go down, but it'll recover because one Bitcoin is one Bitcoin. And
it's because of the Silicon Valley bank shutdown. So if it does anything, it's really just telling me that the traditional finance failed here. So all it is to me is proof that traditional finance failed.
Yeah.
Mine something says, Son of a Tech, largest miners on Dynex hash rate stayed the same after 2.2.4 and SRB miner 2.2.0. Thoughts? I don't have thoughts on that. I don't know because I haven't figured out what the indicators are yet. What are your thoughts, Mine something? RD27 says, at what prices do institutional miners capitulate? They already did, right? So that's the thing that you have to understand right now is the hash rate that's coming online. That is all purchases from miners that failed and went under. They all went under. Here's why, right? So they all went under when the price of Bitcoin hit the point to where it wasn't making sense that they couldn't repay their debts. The reason we saw Bitcoin go down to 16,000 is because of that, right? But they've all pretty much gone through their merger acquisitions or bankruptcies at this point. So I don't think we see any more fail because a majority of these that are picking them up got them through mergers or acquisitions, and or the biggest one that we were talking about, you know, last month was the lenders are mining on these rigs now. So the lenders basically got the machines and just started mining on them, right? Because it didn't make sense for them to resell them. So they're just mining on them. So there's not really a downside for any of the lenders unless, of course, the price goes below what they're paying for power. But in that case, I think you'll just see the lenders turn off. I don't think ASIC miners drop anymore at this point. I think we've kind of seen a bulk majority of that come off already. Yeah, that's what I'm seeing. Let's see. Dio says, that's something. Thanks for all the good information over there. Yes, sir. Nick G says, "Ask Simon Tech, do you think crypto lobbyists will try and fight these potential tax changes?" Oh, for certain. I mean, what you're seeing, I talked about this earlier, you're seeing this become a states' rights issue, because what you're seeing is what you saw with marijuana. You're seeing states put in their rules to protect their citizens and the federal government saying something else. There's going to be some people that they go in and try to raid and make examples of, just like they did with marijuana. And then eventually it'll just be so ubiquitous that they're going to give up on it. And lobbyists like the state, all of the individual state representatives, if it's a pro crypto state, are going to go in and shut that down in the vote. And like a 30% tax on an industry and on a singling out an industry in particular is against everything that the United States stands for. Is it possible for that to happen? Sure, right? But you'd be pretty hard pressed, I think, at this point to see that go through. It's a violation of the Constitution. I mean,
yeah, 100%.
If it did get passed, it would go to Supreme Court, I think.
Yeah, it's anything where they're discriminatory toward mining is unconstitutional. So, plain and simple.
Tonto says, "That's Tech. What if one Bitcoin has an ordinal attached to it? Does that not devalue the SAT? An individual SAT does technically, I guess they say, change the value of that Bitcoin, but then that's based off of the asset attached to that Bitcoin, right? So that's an interesting case. I still don't know where I stand on ordinals for that very reason.
It'll just come down to, I think, what someone will pay for it, right? Because it's like, just think about it like on $100 bill. If someone draws, like, say some artist draws something on the $100 bill, someone that wants to pay more for that because the art will, but other people that don't care about it, it's still worth $100.
Or if it's like the first dollar I earned as a business from, I don't know, Elon Musk, signed by Elon Musk and framed, is going to sell more than $1, right?
Yeah. So I think that's how ordinals will work. So it's like you can sell the ordinal and it's worth whatever someone's willing to pay for it. But it's at the bare minimum, it's worth exactly what it's on the SAT. It's going to be worth that always. So
that makes sense. That's a good point. Tricky says, "That's something like, what do you think about the Octominer immersion cooling heater?" I don't have one, so I don't really have any thoughts on it. I think that these are good innovations in the market, and moving towards them are good. Each individual product will have to stand on its own merit, and because I don't have any experience with it, I can't make any comments.
Yeah, it looks cool though.
Yeah, looks cool. Cryptic says, "That's Tech. I don't know anything about proof of useful work, but Octominer won't work on them." Yes, it will not work on them for multiple reasons, depending on how proof of useful work is implemented. We talked about it earlier in the show, but to keep it short, right now, proof of useful work in its implementation on DNX requires a lot of CPU computations, is because most miners are built with low-end CPUs. It can't process all of the data. So you have basically poor latency back to the pool, which decreases your hash rate as well. And you end up with basically not making as much as it looks like you may, right? In addition to that, though, in the research paper for Flux, the other issue is going to be a requirement of increased PCIe lanes. Typically, mining rigs like Octominer, and or if you're using risers on most of the motherboards, will turn down the PCIe lanes to a by 1. That results in lower bandwidth and will result in obviously lower hash rate when we move into use cases like AI and so on, or rendering, etc. So you will have to have basically like by 8 lanes more than likely per GPU. So you have to have 8 lanes per GPU, which means if you're doing multiple GPUs per unit, you're talking about needing enterprise grade infrastructure. So servers, right? That's what you're going to need to do that. Sustainable Crypto says, "Ask Tech, BMN3 was what's a good price, and do you have a code to a store? BT miners 28 $659. BMN3. I don't know. What's the BMN3? I'll go to BT miners. But yeah, you can use promo code SOAT at checkout for BT miners. BMN3. What does that mine, Django?
I don't know. BM3?
BMN3 is the CKB miner. Okay.
Oh, Nervous.
Gotcha. I don't know what a good price on those is right now. I mean, BT miners is usually pretty competitive. We could check Coastal Crypto and see if they have it cheaper. I think Mark was in here earlier, but I don't even think Coastal Crypto has those in stock last I checked. Because I was looking at their page not long ago. I don't recall seeing that. No, I don't see it. They have the BMK3, but that's different. So, yeah. Run your profitability calculator on it, right? I mean, go to ASIC Miner or MinerStat or whatever. Pull up the CK. What is CKB's algorithm?
The Nervous.
Oh,
yeah.
I don't know what that. I don't know which one that. Hold on, let me look. I'm sure chat's yelling at me while I'm trying to figure it out myself.
Yeah.
Why don't they list it? Here, hold on. I'll do it this way. I'll go with the currency, right? Oh, no, can't.
NC Max?
Well, it's the same as the K7.
Yeah.
Eagle Song.
Yeah, that's what it is. Eagle Song. Yeah.
That one's still gonna. I'm gonna forget that one every time, dude. It's just the way it is. So then we scroll down. Oh, let's just do the. Let's click in on here. We'll go what 20. 25 terahash, so 25,000 gigahash at 3,300 watts. Seems pretty poor compared to the K7 in efficiency. And at 13 cents a kilowatt hour, you're losing a lot of money per day. 10 cents a kilowatt hour, you're losing $1 a day. I don't know. I feel like there's probably better CKB miners, right? I mean,
I don't know. I don't have a lot of ASICs, just the one.
Yeah, I mean, I guess that's the only CKB miner available right now because the K7's not out. Well, the CK box is the 21, so that'd be 20 or 2.1 terahash, so that would be 100 gigahash at 400 watts. Calculate. You'd lose less money on buying. How many of those would you have to buy? 10 of them? Buy 10 CK2 boxes would be $3,600 for the same hash rate, about 10 or 11 of them. So I guess you get more hash rate, but you get better efficiency on the CK box too. I don't know. I don't know that I would buy one with the K7 out. What do you think?
Yeah.
I think I just try to save up for a K7.
Yeah. It's hard. For me, I would only buy the newest gen stuff because that will last the longest. Like with the most, well, as long as it's, as long as you're getting the good efficiency and the price is, right, then yeah.
And their price is going to be driven up when it gets to a bull run. So
Yeah, exactly.
like right now, you could buy like any ASIC and expect that the price is going to go up at least a little bit. The thing is like, why not then buy the best of the best so that it is profitable right now?
Yeah, exactly.
You know what I mean? Like,
yeah, it's like, would you buy an L7 or an L3? You know, the L3 is way cheaper, but it's not really that it's not profitable. But you know, yeah, why wouldn't you just buy the L7?
If you're I guess like, yeah, if you're low on capital and you're just buying mining equipment in anticipation to mine on it for a little bit and then sell it in the bull run, then fine, buy the cheap equipment, leave it offline, and then sell it, right? So an S9, for example, was going for like $200 prior to the previous bull run, and then it went up to where they were selling to $800 to $900. So if you just bought the S9s and threw them in a warehouse, cleaned them up, threw them in a warehouse or whatever, and held them until the next bull run, you could literally run a business off of that alone, right? So there is that argument, depending on the amount of capital that you have. If you just can't get the best of the best, then that is the business strategy I would take. But if you have the ability to buy the best of the best and then capitalize on the fact that you're profitable during a bear market and then also sell it during a bull run, then you're next level, right? You've just basically giving yourself two revenue streams instead of one off of a single asset. So it just makes more sense. Now, Peter Payne says, "Ask Tech, how's the Ironfish airdrop work?" I don't know yet. I was just planning on mining it. I wasn't really interested in airdrops, but I probably should be, I guess. I technically participated in testnet 3, but I think that just goes to me tying my name to it, to a wallet. Legendary Status Gaming says, "Ask Tech, what GPU should we be looking forward to buy now for the bull run?" That's really going to be up to you. Like, you need more support for the new Intel GPUs, but I really like the Arc A750. And if more support's been coming from more miners, once there's better Linux support, which hint, I just saw Hive tweet that they have Arcs in-house for testing.
Ooh.
So, and you're talking about basically the most efficient GPU for Ergo is the A750, and the price of them is extremely low for their performance. They're $250 brand new. So you're also getting the warranty along with it. It's $250, and it's the most efficient at Ergo, which has a potential for being a profitable GPU mineable coin, which it's also extremely efficient at ETH already. And more algorithms are getting added support. You know, I'm leaning towards the Arc A750s because I don't see anything else like that. They're on par with the 3070.
Yeah.
But they're $200 cheaper.
Yeah, I don't have any Intel GPUs, but I want them. Like, I think that when I start buying again, I'm going to build out a full 8-card rig with
I'll build the full 12 with the A750. The A770 is too expensive and you don't get a memory boost on it, so I don't think it's really worth it. A750 I think is right, just like that sweet spot. And they're trying to sell them so hard. Like, there's crazy deals. Like, if you worked a deal through like AliExpress, you could pick up, they were selling in bulk through a Japanese reseller for like $200 a pop. Like, if you can find a deal like that, like, I don't think you're going to beat that. Like,
that's pretty good.
And they do like 55 mega hash a second at like under 90 watts on ET. So there's that.
Yeah, very sweet. I want to build out a rig just so I can see, and then once I see it, then I might build more, or I don't know, more 30 series cards, but you know.
Yeah. I mean, the efficiency on Ergo that I've tested is so insane. It's by far the best. The only thing we have to worry about on Ergo is the launch of the Bitstream for the FPGAs.
Yeah.
So If that happens, then Ergo very quickly leaves the GPU mineable space, and Ergo's already really struggling with their image.
There's a lot of the 170HX cards mine Ergo so well, and if they get dropped off, like if they're not profitable on GPUs anymore, I'm gonna be stuck with ETH and Ethereum Classic. That's gonna suck.
ETC, yeah, we need Ergo to
I need Ergo to succeed, because I don't know, they're pretty good. They get like 380 mega hashes at like 200 watts, the 170HX card on Ergo. So yeah, it's pretty good. And I've seen people selling them for around $1,200 a card used. So it's like, if you get them at that price, then yes, I think they might be worth it, but I would not pay no $3,000 something for them. But yeah, $1,200 is pretty good. But they're a pain. You have to blow air through them. Like, they don't have fans on them. So, but they work.
Snark says the A770 has 16 gigabytes of memory. Oh, I didn't know it had 16. Oh, but it's the same memory bandwidth, right? Is that what it was? Intel Arc A770. Oh, there's A770 has 8 gigabyte and 16 gigabyte versions. I wasn't aware of the 16 gigabyte version. Guess I hadn't looked up the A770 in a while. So it's probably worth checking out then. What's the A770's specs with 16 gigabytes on it? Or what's its bandwidth? 256-bit bus, 512 gigabytes per second. I think, hold on. So tech power up. 512 gigabytes per second. So Dynex would be the only thing it would perform better in, because it's the same bandwidth. So I don't see, like, and am I willing to pay $164 more for better performance on one algorithm of a small cap coin that could succeed or collapse without any influence from me? Probably no. I'm not interested in that. If it was 1 terabyte of bandwidth or something, then I'm down, but nah, I'm good other than that. I think I'm ready to wrap it up. I let the kids stay up way too late. I gotta go put them
to bed.
Yeah, it's way too late, man. But you know, it's my son's birthday weekend, and I was like, you guys can play some games. I wanted to play games with them though. Now I gotta go sleep.
Yeah.
Thanks everybody for watching. Where can everybody find you, Django?
On YouTube at DeFi Django, and on Twitter at DeFi Django. It's DeFi_Django on Twitter. You can find me there. But yeah, there I am. I'm pretty sure most of you guys already follow me. It's same group of people on everywhere we go, right? We're a small community.
It is what it is. It'll blow up again.
Oh yeah.
Thanks everybody for watching.